Hey everyone, I'm Toni Taylor, Senior Loan Originator with Interconnect Mortgage here in Palm Beach Gardens, Florida. And today I want to answer one of the most common questions I get asked every single week. What credit score do you actually need to buy a home? Because I'm going to be honest with you, if you've been Googling this question, you've probably found a whole lot of "it depends" and typically 620 or higher, and you're sitting there thinking, okay, but what does that actually mean for me? So today, I'm going to give you a real answer, not a vague one, a real one. I've been in the mortgage industry for over 35 years, right here in Florida, and I've helped buyers at every single credit level find a path to homeownership. Some of them had 780 scores, some of them had 580 scores, and some all the way down to 500. And a whole lot of them came to me absolutely convinced that they wouldn't qualify. And they actually walked away with the keys to their home in hand. So let's get into it. Here's the most important thing I want you to take away from this video. There is no single credit score requirement for buying a home. The number you need depends entirely on which type of loan you're applying for. And that's actually really good news, because it means that there are multiple paths to homeownership. And it's our job to find the one that works and fits you best. So let me walk you through each loan type and exactly what the credit score requirements look like. We're going to start with conventional loans. Conventional loans are what most people picture when they think of a mortgage. They're not government-backed. They follow guidelines set by Fannie and Freddie Mac. The minimum credit score for a conventional loan is 620. But here is what I really want you to understand. Your score doesn't just determine if you qualify, it determines what interest rate you get. And that matters a lot. There's a significant difference between qualifying at 620 and qualifying at 740. The difference can mean hundreds of dollars a month in your mortgage payment. So if your score is sitting between 620 and 680 right now, you can probably qualify, but it might actually be worth taking 3 to 6 months to move that score up before you apply. Or there are other options that may make more sense. We can help you figure out whether the trade-offs make sense for your specific situation. Next up is the FHA loan. FHA loans are government-backed and they're designed specifically to help buyers who are still building their credit. They're incredibly popular with first-time home buyers here in Florida, and for really good reason. Here's how the scoring works for FHA. If your score is 580 or above, you qualify with just 3.5% down. If your score is between 500 and 579, you can still qualify, but you're going to need 10% down. And if your score is below 500, you're not going to be eligible for FHA financing right now. Now, here is something important I want you to know about FHA loans. Individual lenders can set what are called overlays. That means they can require a higher credit score than FHA's actual minimum. This is exactly why working with a mortgage broker matters. We're not locked into one bank's rules. We have access to multiple lenders. So if one door is closed, I can find another one. Now, let's talk about VA loans. And if you're a veteran or active duty service member, please pay close attention to this part, because this is one of the most powerful mortgage benefits available to you, and honestly, not enough people use it. Here's the one thing about VA loans. The VA itself does not set a minimum credit score. Most lenders typically look for somewhere between 580 and 620, but we have lenders that go all the way down to 500. But here is what makes VA loans so incredible. Zero down payment requirement, no private mortgage insurance, and some of the most competitive interest rates available anywhere. If you've served this country, thank you, and please do not assume you don't qualify before you talk to somebody. We would love to help you use that benefit that you've earned. Now, next up is the USDA loan. USDA loans are for buyers in eligible rural and suburban areas, and parts of Florida absolutely qualify. They also offer 0% down payment for buyers who meet income limits. Most lenders are going to require a 640 minimum score for streamlined processing, but lower scores can sometimes be approved with strong compensating factors. If you're open to areas outside the major metros, this loan is absolutely worth exploring. And then there are non-QM loans. This is where things get really interesting, and this is where a lot of buyers are genuinely surprised. Non-QM stands for non-qualified mortgage. These loans don't follow conventional guidelines. They are specifically designed for people whose financial situation doesn't fit neatly into a traditional box. That includes self-employed borrowers who can't show traditional income documentation, real estate investors using bank statement loans or DSCR loans, buyers who have had a recent credit event like a short sale or a bankruptcy, and high net worth borrowers with complex financial situations. Credit requirements vary by program and by lender, but non-QM opens the door that conventional lending keeps shut. And this is just one of our specialties at Interconnect Mortgage. So let me give you a quick summary of what we just covered. Conventional loans require a minimum of 620 with 3 to 20% down. FHA loans require 580 with 3.5% down or 500 with 10% down. VA loans have no official minimum credit score or down payment, 0. USDA loans typically require 640 with no down payment. And non-QM loans are flexible, starting at 580 to 620 with down payment requirements that vary by program. Now, let's talk about what you can actually do if your score isn't where you need it to be yet, because this is the part most people skip, and it is the most important part. Credit scores are not fixed, they move, and some of these moves can happen a lot faster than you think. The first thing I want you to do is pay down your credit card balances below 30% utilization. That means if you have a card with a $1,000 limit, you don't want to have a balance exceeding $300. This is the single fastest way to move your credit score. Credit utilization makes up about 30% of your FICO score. Getting your balances below 30% of your limit, and ideally below 10%, can show results in as little as one billing cycle. One billing cycle, that's 30 days. The second thing, if someone you trust has a long-standing credit card with a low balance and a good payment history, ask them to add you as an authorized user. Their positive history can show up on your credit report. You don't even need to use the card. Third, do not close old accounts even if you don't use them. I know it feels like cleaning things up, but closing old accounts actually hurts your score. It shortens your average account age and it reduces your available credit. That old department store from 2009, keep it open. Fourth, pull your free credit report at annualcreditreport.com and look for errors. Studies show a significant percentage of credit reports contain mistakes. Disputed items that cannot be verified must be removed. I've seen this boost scores by 20, 30, even 50 points for my clients. And the fifth thing most people have never heard of, ask your lender about rapid rescoring. Rapid rescoring is a service that allows lenders to submit proof of corrections or payoffs directly to the credit bureaus and get an updated score back in as little as 3 to 5 business days, instead of waiting 30 to 60 days for the bureaus to update on their own. You can't do this yourself, it has to go through a lender. But if your score is just a few points away from where you need to be, this could be the thing that gets you there. And before I wrap up, let me quickly bust a few myths I hear constantly. Number 1, checking my own credit hurts my score. Completely false. Checking your own credit is a soft inquiry, 0 impact on your score. Check it. Know your number. Myth number 2, I need to be completely debt-free to buy a home. Not even close. Lenders look at your debt-to-income ratio. Manageable debt with a good payment history actually demonstrates creditworthiness. Now, myth number 3, if a bank denied me, I can't get a mortgage. Banks have very rigid guidelines. Mortgage brokers have access to dozens of lenders and programs. A denial from one institution is absolutely not the final word. Myth number 4, my score will drop if I apply for a mortgage. Multiple mortgage inquiries within a 45-day window are treated as a single inquiry by FICO. Rate shopping does not tank your score. Do it. Okay, so here is what I want you to do right now. Stop guessing. A credit score is a starting point, not a verdict. What matters is your full financial picture, what loan programs you actually qualify, and what a realistic timeline to homeownership looks like for you specifically. We do free consultations, no obligation, no pressure, and no confusing jargon. Just a real conversation about where you are and how to get where you want to go. So whether your score is 580 or 780, I want to make sure you're making the most informed decision possible, because this is probably the biggest financial decision and move that you'll make in your life, and you deserve to get it right. Click the link below to book your free consultation. You can also call or text us directly at 561-373-3282. 0371. I'm Toni Taylor with Interconnect Mortgage, and I'll see you in the next one.